Hi guys, it's Sunday afternoon and I've just been going through last week's trades. And last week I traded slightly differently. So I normally trade the Forex market and it's normally pound against US dollar or the euro against US dollar. But as you can see here on the chart, I've been trading the Germany 40 or the DAX as it's known, so the top 40 companies in Germany. It's an indice. And I've traded it before in the past and it's a good way to get some daily profits. And the reason I stayed away from the Euro US and the Pound US, because there was a lot of news reports coming out, a lot of activity coming out this last week. And certainly here in the UK, we've been affected by the budget, first Labour government budget in ages. And obviously leading up to Friday, so on Friday we had the non-farm payrolls coming out of the US, which is a change of employment in all industries, including the farm industry. And that comes out the first Friday of every month. And that can produce a very volatile market, anything involving the US dollar, so the pound against US, euro US. And I tend not to like to trade it. If I'm already in the trade, then fair enough, but I wish to avoid that. So there's a lot of activity going on from like Wednesday to Friday. And obviously, coming up to that period of time, there's the market's never particularly, how can I put it, particularly stable or normal characteristics, because everybody's anticipating these reports that are coming out, certainly with the budget here in the UK and obviously non-farm payrolls. There's a lot going on, so I decided to, as I say, trade the Germany 40, which is the DAX. Now, good thing about this well, it's good and bad. There's a lot of volatility, so it can move a lot in a day, like a couple of 100 points or pips, however you want to say it. I tend to use points when talking about the indices, but you can say pips as well. So here on the chart, it's a 5-minute candlestick chart, and I've got two moving averages, and I've got the MACD. Now, I've traded the moving averages before, but now I've also been using the MACD as well, because it tends to confirm what's happening with the moving average. So each candlesticks 5 minutes. Okay, 5 minutes to trade in. And these two ovals here are where I got in, where I got out. Now I'll just explain what I did. So I say these 5 minutes. Now if you look down here, what happens is the MACD, when the blue line crosses the red, and you see these green bars here, that means the price is increasing. When it crosses the red coming down and these red bars, it means the price is decreasing. And it decreases more the bigger the candlestick bar. Okay. Now the moving averages up here, I tend to like the 6 and the 21 EMA. Exponential moving averages tend to reflect more recent price changes. And I think 6 and 21 is very good when you're trading off the 5-minute chart. They're very quite short term. So when the 6 crosses the black, so when the black is a 6, when it crosses the gold 21, you buy, and when it goes down, you sell or exit. Some traders will use 3 moving averages. You can use 3 moving averages, so you can put a longer term like 100 or 200. But just for the day trading for these 5 minutes, I'm just using 6 and 21 here. So I got in here. You can see it's just about crossed here, and I set my order for a limit. So I was only looking to take like 50 pips. So we go all the way up here. It's 980. Sorry, 913. So it's about it's about 70 pips or so. And I actually got out here. Well, the trade took me out about 50 pips, but as you can see, it starts turning down here. And it starts coming down even before this little process on the MACD. You can see it sort of reached a peak and it's starting to turn. So you can get out anyway if you're watching it. Obviously, I could have got out here, the moving average, but then I probably would have just broken even. And if you're watching it and you haven't set the order, then obviously you could come out as soon as the MACD starts turning, which is a little bit sooner than the moving averages, but it does seem to work. And obviously I put a stop in, so when I set these, I would put a stop in. For example, if you're putting a stop in, you could look at the Donchian channel. So for example, if you're up here and you're starting up here, that's 10,906. That's 25. That's about, and you're looking at say maybe like 30 pips or 30 points. So it's a fair size stop. So maybe you're looking at 30 pip or point stop and a 50 gain, or maybe a 60 gain, 1 to 2. But obviously, yeah, always put a stop in when you're doing this. So I'll take the punching channel off for now, and we'll focus on this. So that was me today. But as you see, there are plenty opportunities here. I mean, that was early in the morning. This is 9:20, and it's coming down here. We look at 19,524. It to cross 439. So 40 is 60, about 80 pips or point. But you could have got out even earlier, because as you can see here, the MACD is already coming back up here. So you could have got out at what, 19,426. Saved maybe about nearly 20 pips. Because you got there, so go in there. And in fact, if you'd gone in here, 19,439, remember you're waiting for the whole line to cross, not for the price. Some traders go by price, I go by the actual moving average, 1939, and you go all the way up here at the end of the day, 1939. What did I say? What was that? So back to here. So yeah, so it's 19,465. So go up to here, and it's 532. So it's about at least maybe 65 pips. There's another one there. So there's plenty of opportunities. Then as we come across the Asian set here, which runs from about midnight to 7:30 in the morning, we can see it stays relatively flat. Okay, and then looking at what's that? That's 5:30. So it's already starting going up at 5:30 before the European market opens. So by the time I get in here, I'm a little bit late, but it's above the moving average. So I just go for the quick 50 pips, which I get. If you got in at 5:30, obviously, I think it probably was up, because I did get up early, but I wasn't ready to trade. And you could have gone all the way until you get out here to when that crosses. And you get here again, 9,588. You could write it all the way down here. Look, it carries on 588, 498, about 90 pips. So you can see there's plenty of good opportunities here, just with the MACD and the moving averages. It's called trend trade. You're trading with the trend, and you can see I've put an arrow in here. It starts turning here, so that's when you get out, and that's in under 5 minutes. So you probably would have got out here, get out there. So 19,416. So you'd only made about 15 pips, or you could have got out there, you would have got a few more. But then here is the big move. Here we get in at 7:10, which is more or less when the European market opens, 7:10 to 7:30. If you're up early in the UK here, and you go in at 19,420, say, and you ride it all the way down. See, price crossed here, but the moving average hasn't crossed, so you'd still be in the trade. And obviously a stop would probably be at the top of here somewhere. See some consolidation been ranging for what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 at 5 minutes, 70 over an hour. It's been consolidating there, but it comes all the way down here. Again, you can see it's turning here on MACD already, so you could have got out here right at the very bottom. See the support here. You could have got out there at 1.65 was that? Or was that 19? No, it was 196. And you would have saved about 54 pips there. So a lot of pips you could have saved there if you'd gone early on the MACD there. And then it goes up again, comes down again. You pretty just broke even on that. You only need one good trade. You wouldn't keep going in and going back for trades. And here I'll put the box here of the Asian session. The Asian session is what I'm talking about. It doesn't do anything on the Asian session. I'm not even awake, to be honest, around about 7. So UK time, as you can see, stop break about 6:50, and you get to 6:50. Yeah, it's kind of slightly, it's already starting to come down. So if you're around at 6:50 in the morning UK time, 19,153. You wouldn't just broken even. Whereas, as I say, if you go by the MACD, if you'd gone at the very bottom, 19,085. 19,085, go up here, so 26, 36, 46. You could have got about 50 pips if you come out early. You can see that D tend to come out a little bit earlier, tends to indicate it earlier than obviously moving average. So maybe when you exit, go by the MACD instead. Then here we've got another one, get in around 10.9154 and get around there 163, another 90. Or you can see that D is showing earlier, so you can see it's starting to cross. Go to the green here earlier on this one, so you can exit with the MACD and get out a little bit earlier. And then if we go all the way across, this is the big one on Friday. So if you look here, 740 on the market opens, 1908 and you go all the way up and you cross 150 pips. So we just stand here, you get 100, £2 a pip, that's £3. Really easy, or four, you're looking at £600. So, and that's all the way to the end of the session at 425. That's the whole Friday session. Traders don't trade Fridays. They it's pretty quiet. Traders go home early. Everybody's shutting up shop. But there you go. It proves you can make a lot of money on a Friday trading the DAX, for example. Okay, so if I go back to this pound US, and just wanted to show you this one here. So this is where the news report came out, the non-payrolls, and here we've got about 60 pips. And what happened was the change in number of employments. I looked on Fox Factory, it was about 12,000, and they were looking at something like crazy. The forecast was something like supposed to be like 106,000. Obviously, what happens is your dollar weakens, and so the pound's going to absolutely go up against the US dollar like that, and it's tended to stay up, as you can see, comes down slightly towards the end now at 5 o'clock, and it does start to settle back, but you get the actual burst. That's why I don't trade non-farm payrolls today. The more you trade, then fair enough. For example, I was already in it, make a bit of it, then I might say it's very difficult to predict. Some traders can predict it, but I stay well clear of it. I mean, you look at like 50, 60, 5 minutes alone, you just got to stop it. That's I stayed away from pound US and Euro US this week. Next week, obviously on Tuesday we've got the US election, and that's really going to heavily affect any trading you do as regards the US dollar. So pound US, which I normally trade. Obviously the London breakout strategy on that as well, and the Euro US, and even on the Monday coming up to Tuesday, there's going to be, what might happen is the pound US and Euro US, they might stay in a certain range because traders are staying quiet to see what happens as regards to US election, and no one really knows the result, what's going to happen, despite all the forecasters predicting this, predicting that, and what's going to happen whoever gets in. So there'll be a lot of volatility as regards the US dollar, so any currency against the US dollar, and obviously things like the S&P 500 as well will probably be affected, the Dow Jones. So there's going to be a lot of markets that will be affected, and obviously the US election affects everybody worldwide. I mean, the whole US economy has this ripple effect internationally as well. So it's highly anticipated what's going to happen on Tuesday. So I certainly, I will wait. I'll say this now, I'll wait until after Tuesday before I even think about going to trading the pound US and the Euro US. I'll be looking at the DAX next week, depending on what signals I get on that, and certainly using MACD here and the averages, because you can see you get some nice signals, 2 or 3 signals a day. You only really need one big move like 150 pips, and that's it. You can call it a day. You hit your trading goals for the day. So yeah, that was my week. So looking forward to next week, see what happens. To say I'm staying well clear of the pound US and the Euro US. Any US dollar trading, I'll wait till after Tuesday, see what the election brings. That should be interesting. In the meantime, I shall trade other assets. Primarily, I think I should be trading the DAX again, as I was up this week on the DAX, and I could have been up even more. So I'll be looking at the DAX next week. So yeah, if you want to see how I do trade the forex, though, I've got many videos where I've been trading the pound US and euro US using various strategies, primarily London breakout. But yeah, you can have a look at my clips of how I trade the forex market. Pop along to Running Trader, subscribe, and you'll see more videos like that. And I will see you soon.